Well, Jerome Powell took to the stage and delivered one of the most dovish and bullish FOMC speeches in a long time. The stage was set for Bitcoin to blast off, and then we dipped below 90K. Well, today we're going to dissect the key points from Powell's speech yesterday, breaking down just how bullish it really was, and explain why the bull market hasn't even begun yet. But that's not the only insanity happening. Big news out of that cesspool in Washington, D.C. Remember when Trump said this?
And tonight I'm also making another promise to protect Americans from government tyranny. As your president, I will never allow the creation of a central bank digital currency. Do you know about that?
Well, it's time to stand on business because Republicans are accusing House leaders of breaking their promise to ban a CBDC. And while the Fed prints and the state moves toward tyranny, Bitcoin is preparing to rage against the machine in a massive way. Tonight, we're going inside the mind of a Fed chairman, breaking down the doors of digital dystopia and preparing ourselves for the bull run of a lifetime. This one's not for the faint of heart. So yeah, Jerome Powell walked up there, delivered the most dovish FOMC speech he's ever given, arguably. And instead of blasting off, Bitcoin dips under 90K again. I know, makes zero sense on the surface. But once you decode what Powell really said, you realize the entire thing is one giant green light for the next Bitcoin super cycle. Let's break it down. The Fed cuts rates by 25 basis points. Everyone expected that. But here's the real story. QT ended December 1st. T-bill purchases begin December 12th. 40 billion per month. Powell says this isn't QE, it's just reserve management. Meanwhile, Bitcoin, red candle, but the real fireworks came during Jay Powell's Q&A session. Powell's unscripted confession? The system broke. He admitted the real reason the Fed is restarting T-bill purchases. Quote, the federal funds rate ticked up quicker than expected. Translation, QT broke the plumbing. Then Powell tried to soften it. We are resuming reserve management purchases. Fed speak for inject liquidity or something snaps. Then he delivered the knockout line. Quote, there's a secular need to grow reserves 40 billion per month. Brother, that's not neutral policy, that's life support. No healthy system needs a $40 billion a month IV drip. Well, the mid-curvers scream, but it's not quantitative easing. Well, they're printing money. They're monetizing the deficit. It's QE light. The label doesn't matter. So why did Bitcoin dip again? Because in 2025, Bitcoin has developed a pattern. Every FOMC meeting equals post-Fed dip. 6 of the last 7 meetings, drawdowns, ranging from a few percent to nearly 30%. You can literally just put yellow lines on the chart. Bitcoin recoils like a spooked horse after Powell's speeches. But the dips are getting shallower. Liquidity conditions are turning and the bull market hasn't even started yet. Oh, and would you look at that? Tom Lee just dropped a little bombshell on CNBC. Roll it.
So the ISM moving back above 50 has historically been associated with actually supercycle moves in Bitcoin and Ethereum.
You hear people saying QE is coming, the liquidity is coming, buy Bitcoin or buy whatever crypto asset or buy stocks because this is coming. So it's important to know whether it's coming or not.
Comes from the banks, though.
Yeah,
Fair.
But yeah, in the crypto world, QT was draining liquidity. So the ending of QT is essentially QE, because if they're just holding the balance sheet flat, they are still going to be essentially adding liquidity to the system.
Just to maintain the size.
Yes, and so that is why I think crypto prices have risen in anticipation of this meeting.
So do crypto prices keep going? Do you have a bullish view still on small caps if we're finally going to get that rate coming down a little bit? Where should people look for alpha or outperformance?
Yeah, I mean, like 2026 is a year like there's a new Fed, right? But a dovish tilt. And at a time when the ISM has been below 50 for a record more than 3 years. So that's really good for small caps. And as Barry says, if they deregulate banking, and we were talking about this offline, that's really good for small caps. But that's also really good for the business cycle. And we've talked about this in some of our past research. Crypto prices are really sensitive to the ISM. So the ISM moving back above 50 has historically been associated with actually super cycle moves in Bitcoin and Ethereum.
Wait, ISM going into expansion territory is positive for Bitcoin? And
correct.
For all, interesting.
Yeah, and so if you look at ISM and Bitcoin, and you detrend Bitcoin, essentially look at its distance from the 200-day, it's almost perfectly correlated to the ISM.
Surprising.
And same thing with copper to gold prices. So copper's an industrial metal versus gold is a monetary.
Right, but all of that tells you that it's basically just risk on, that they're all behaving like an economy. And am I overcharacterizing
Yeah, I think
it?
I think that's right. I think Bitcoin's a bit of a chameleon because there'll probably be a time when it acts like gold, but right now it acts a lot more like it's sensitive to monetary policy and the business cycle, and both are about to turn up. So that would mean anybody who thinks the Bitcoin 4-year cycle means crypto prices are down next year, we're betting against that thinking that new highs come early,
That's
like in January.
He said Bitcoin is highly sensitive to ISM, and when ISM moves above 50, Bitcoin has historically entered supercycle mode. This isn't a halving story, it's a business cycle story. Powell even hinted the economy may accelerate next year. Let's go ahead and simplify it. The Fed cut 25 basis points. They're going to be buying 40 billion in T-bills. And they say the purchases will continue for months. They admit the labor market is weaker than reported. They say job gains overstated by 60,000. And this is a big one. Powell said no one is forecasting rate hikes and says rate cuts are meeting to meeting. And they show 2026 growth improving. This is a clear directional turn away from restrictive policy toward risk asset support, with liquidity quietly flowing. Bitcoin under 90K, noise, a macro shakeout, a continuation of the same 2025 pattern. Underneath it all, the foundation for the next explosive Bitcoin run is being poured by Powell himself. But while Powell turns the liquidity hose back on, Washington is quietly trying to clamp down on your financial freedom. And here's where things get a little dark fast. You remember when Trump said this? Quote, "As your president, I will never allow the creation of a central bank digital currency." Well, it's time to stand on business, because Republicans are now accusing their own leadership of breaking the promise to ban CBDCs in the new defense bill. This was supposed to be ironclad, guaranteed, delivered. Instead, they slipped it out the back door. The House passed a nearly $900 billion NDAA, but the long-promised CBDC prohibition gone. Representative Keith Self came out swinging. Quote, "Conservatives were promised explicitly that strong anti-CBDC language would be included. That promise was broken." Self tried to restore the CBDC ban. Leadership refused. It didn't even make it out of the Rules Committee, never went to the floor. The NDAA is 3,000 plus pages. The place Congress buries controversial policy. When language disappears, it's not an accident. Back in the summer, House conservatives refused to move forward on crypto bills unless the NDAA included a CBDC ban. Leadership promised it would. Trump's team applied pressure. The GOP base demanded it. Then, committee revisions, markups, quiet edits. The ban vanished. Marjorie Taylor Greene didn't hold back. Quote, "I support digital assets, but I will never support giving the government the ability to turn off your money." The early drafts banned Fed CBDC testing, Fed CBDC development, Fed CBDC issuance, Fed accounts for individuals. All that's gone. That wasn't sloppy drafting. That has to be intentional. What happens next? Well, yes, the standalone Anti-CBDC Act passed the House earlier this year, but it's gathering dust in the Senate. Representative Self says financial freedom isn't negotiable. And he's right, because CBDCs, digital IDs, social credit systems, they are one architecture, one system of control. And we're not going to let Congress memory hole this one.
He said the wonderful thing about central bank digital currency is inflation is no longer a problem. If you have inflation, you just freeze everybody's bank accounts. Isn't that wonderful? Okay. So central bank digital currency. Central bank digital, the important thing to understand about central bank digital currency in an all digital financial system is it's not a currency. It's a control grid. Now, the process to implement central bank digital currency around the world is being overseen by the Bank of International Settlements in Basel, Switzerland. And the Bank of International Settlements is owned by its members. The New York Fed and the Fed are both, the Board of Governors are both shareholders in the BIS. 63 of the top central banks are in the BIS, and they are running a process with a major partnership with the Federal Reserve to implement CBDCs in their prototyping around the world. In 2020, October 2020, there was a panel at the IMF on cross-border payments. Jay Powell, chairman of the Federal Reserve, was there. Augustine Carstens was there, and Augustine Carstens said the following, and I'm going to play this for you in a second, but I want you to know I was basically raised and trained to be a central banker. I was asked to be a governor of the Federal Reserve and declined. But I was raised that way, and one of the things you're raised to understand is you never, ever, you use pretzel talk. You never explain clearly what you're going to do. You talk in circles. And this was the first time I had ever seen a central banker in English explain exactly what they were planning on doing and why. And I almost fell off my chair. And if you think I almost fell off my chair, you should have seen Jay Powell's face. Okay, so here's Augustine Carstens, 57 seconds, explaining CBDCs.
All our analysis on CBDC, in particular for the use of the general use, we tend to establish the equivalence with cash, and there is a huge difference there. For example, in cash, we don't know, for example, who's using a $100 bill today. We don't know who is using a 1,000 peso bill today. A key difference with the CBDC is that central bank will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability. And also, we will have the technology to enforce that. Those two issues are extremely important, and that makes a huge difference with respect to what cash is.
Now, apparently, some people think we're in the down part of the 4-year cycle. Wrong. Dead wrong. Because the 4-year cycle isn't just broken. Bitcoin has outgrown it. The 4-year cycle, it's dead, gone, cooked, buried next to BlockFi and 3 arrows. And this isn't coming from TikTok. This is coming from Bernstein, one of the biggest investment research firms on Wall Street. Quote, Bitcoin has broken the 4-year pattern. We are in an elongated bull cycle driven by sticky institutional demand. That sentence rewrites 15 years of Bitcoin mythology. Historically, halving, euphoria, blow off, 80% drawdown, nuclear winter. Repeat. But now, institutions don't panic sell. They don't capitulate. They don't emotionally nuke their own bags. Bernstein noted, despite a 30% correction, ETF outflows were less than 5%. That is historic. That is what breaks the old cycle. And Bernstein now models 150K in 2026, 200K in 2027, and $1 million Bitcoin by 2033. Still very bearish in my opinion, but they're getting there. Kathy Wood, you saw her yesterday, same conclusion. She said institutional adoption is smoothing out volatility. The massive crashes of 2013, 17, 21, not likely to repeat. VanEck, Fidelity, BlackRock, all modeling structural demand curves, not having waves. What we're saying is, this isn't 2013, this isn't 2017, and this isn't 2021. This is a new era. Has the prophetic supercycle begun? Well, we're about to bring it home and find out, but before we do, Look at our likes.
3 or 4 times, maybe.
I gotta pump those numbers up. Those are rookie numbers in this racket.
Let's take a quick second for our sponsors who keep this show on the air over at the Bitcoin Way. If your wealth lives in their system, it's not yours, it's theirs. That's why we scream Bitcoin. That's why you self-custody. And that's why you call our friends over at the Bitcoin Way. They'll walk you through multi-sig, self-custody, privacy, how to run a node, and the tools that keep you sovereign when the fiat system pulls the plug. Don't wait till it's too late. Book a free 30-minute consult today using that link in the show notes. Need cash but don't want to sell your Bitcoin? Ledn is the global leader in Bitcoin-backed loans, issuing over $9 billion in loans since 2018, and they were the first to offer proof of reserves. With Ledn, you get custody loans, no credit checks, no monthly payments, and more. Visit learn.ledn.io/simply to learn more and get 25 basis points off your first loan.
Is the 4-year cycle dead, or is it changing? What do you think?
So, in a sense, actually, it would be better if the 4-year cycle is dead. It's better if we don't follow the 4-year cycles today, because in the 4-year cycles, usually this December will be the peak. But if we follow the 4-year cycles, then the winter will probably the crypto winter will be the next year or 2 years, etc. But right now, I think there's another force at play, which is President Trump, which actually on my shoes there's President Trump. You can see the other side.
Yeah, great shoes.
So I think President Trump is using stock market as a benchmark. So there's rate cuts coming. There's quantitative easing, which will basically pump the stock market, really.
We've been in macro headwinds since 2022, right?
Yeah.
This is the first time that we're starting to see macro turn dovish.
Yeah. So I think when the stock markets do well, people have cash. People diversify their holdings, and they participate in crypto as well. We've seen that, and crypto is much smaller than the stock market today. So crypto is kind of tethered. So I think, I'm not sure, don't quote me on this, but I think that force will be quite strong. So that force may be strong enough to offset the 4-year cycle. Who knows? Yeah.
So you're saying next year bull market?
We may be seeing a super cycle.
He's right. Dovish macro, rate cuts, a pro-Bitcoin administration, ETFs eating up supply, nation states accumulating, corporate treasuries stacking monthly, Bitcoin at 88, 89, 90K, not weakness. The old model is struggling to price the new one. Every metric, MVRV, dormancy, supply and loss, ETF inflows, minor revenues, long-term holder supply. They all say the same thing. We're in the early innings of a far longer expansion cycle. The halving still matters, but it's no longer the engine. The new drivers are global liquidity, ETF accumulation, corporate adoption, sovereign reserves, strategic Bitcoin bills, monetary debasement, a pro-Bitcoin White House, a Federal Reserve easing conditions, and a global system wobbling under its own weight. Put simply, the 4-year cycle didn't break. Bitcoin broke out of it. We're entering what Bernstein, ARK, CZ, and others are calling the first true Bitcoin supercycle. And if this is the beginning of a supercycle, we haven't seen anything yet. So, let us know what you think below, and don't forget to like, subscribe, and give us a pat by sharing the Sound Money Gospel, and I'll catch you all next time. Love you guys. Peace.
If you prefer to go down with the ship, you.